Hi, everybody. What's going on, Alexander, Hugo, Ryan Littlestone?
Morning, Dale.
How are you, partner?
Okay, mate, the boss is away. We cracking open the beers and party
Yeah,
snacks.
yeah, we could. Let's misbehave.
Yeah, get the
All
music on.
right. We laugh,
Punch bowl out.
but we used to do that, right?
Yep.
We laugh at it, but
Oh, yeah.
that's how we were. Yeah.
The
Hi,
boss was off.
Raj,
It all went off.
Ingmar, Brock. All right. So, what a day yesterday, huh? We had
Yeah,
a
a lot of fun and
lot of
games.
red. I don't know. I guess because I learned in bear markets when I came into the business, they had just made it legal. Hi, Simon, for American sewn gold again. And I remember it opened at 200 an ounce and went to 100. So I actually, I was a clerk, runner, out trade clerk on the floor of the CME, and a buddy of mine in the gold pit put a trade on for me, the short side of gold, and wrote it for, I didn't know any better because, I thought it could go to 100, but it did. And, there's a superstition on the floor that if your first trade is a winning trade on the floor, you were on the floor.
Yeah.
It's bad luck.
Yeah. Oh, that was
Yeah,
good.
it was, because I've stayed in the business for 40 years. Anyway, isn't that amazing? I think it's 40 years.
Yeah,
Wow.
where I was, you had to take everyone out for a beer.
Yeah. I hope you guys are planning my retirement dinner. I've never been to one for a trader. All right, that's the end of my comment, stand-up routine. Just want to show everybody something that we talked about early in the week and last week. And that was, part of coaching is not just to tell you what to do and show you what to do, but to tell you why, the whys behind it. Hello, Laura, Simon. And I talked about that this was an important tell to me that the correction wasn't over. So I know you guys like the divergences and the 3 drives using RSI for those kind of formations, but I'm telling you, as simple as it is, that if you just learn that confirmed highs and lows, the probability, not all the time, because there's always exceptions, but there are higher probabilities that when momentum confirms a low, that most likely it is not a low. And that's a big edge, because it tells you that you're on the right track to sell rallies, because you're going to get another low, because this was confirmed, that may or may not be confirmed. Okay, so this low is not confirmed, but just this knowledge of knowing confirmed highs and lows is really a nugget you'll be able to use the rest of your trading career. And it tells you that that's a trend, and then you use your other tools, fibs, formations, whatever it is, to know that anything counter trend is an opportunity to take out that prior low, right? Who has learned that over the years hanging out with me? And more than that, who uses it? And it gives you a bias, right? Doesn't it give you a bias when you know that markets have done that? Okay. Yeah. Well, I think that's worth an annual subscription. Ingmar, Rick. Okay. So, I had to discover it on my own. So anyway, just something that I wanted to point out. So my theory, again, it's just a theory that I've seen, reoccur and reoccur. 18 years, Rick. Wow. I love you, man. All right. You know what? Because what you are is so rare in this world. Loyal. Because everyone's out there looking for the Holy Grail. That is, it doesn't exist.
Amen.
Okay. So the Holy Grail is within you, in your head, is mastering your emotions. Okay. That's the Holy Grail. Master your emotions, be a machine, plan, be patient. All these things that we talk about, having a couple of decent technical techniques, you don't need to have 100 of them. You guys have seen over the years how many times there are 3 drives that work. And you've also seen 3 drives that have turned into 10 drives, right? Where, I keep getting the formation over and over again. And, it's continues to stretch. Okay. So anyway, the point is, here you go. Now, what do we do from here? This to me would be not a reverse out. If it happens 3 times, it would be say we rally a lot and then we just come down and make another marginal low. That might be something, but this market's in a very weakened state. And when you look at this right now, okay, yeah, maybe it could rally back to 15,000, 15,1. But everyone's looking at the market today with the S&P's up 22 and NASDAQ up 111, and they think everything's okay again. And I really don't think things are okay. The fact that we have a continuation move, especially NASDAQ with yields. So, NASDAQ could get a rest if yields come back down. I'd get concerned about the yield scenario if we start closing back under, say, 148 again. And I know some people are also top picking the yen here. There is some,
Hands
a
up.
little bit. Yeah, there's still some divergence. I'm going to wait for this, right? I had that line there for a long time. I think it's a magnet and that it could complete up here at 12.5. So it depends how it gets there. If it blows out divergences, I won't sell it there, but I'm still thinking we have this up here. So I don't know how much higher that'll take yields. But anyway, I think that there's a correction underway. And before I bring in the rest of the team, I'm going to share with the team and you guys my Nostra Pinkard Blue Speed line in NASDAQ. So it's pretty aggressive, isn't it? So we'll see. One step at a time, we'll violate the wedge line and the megaphone line back under 14.5. So that's the next important level in NASDAQ. So, a lot of people pretty bullish a dollar here, and I can't blame them, Ryan. I mean, we broke out over that 92.50 level and we're getting some follow through. What are you thinking here with the euro? I know some people thought, and myself included, thought we were grinding out some kind of low, after this.
Yeah, it looked that way yesterday. Wasn't budging, was it?
No, I mean, it was tough compared to the pound. I mean, euro was only down, what, 18 pips?
Yeah,
but
exactly.
today it seems to,
Yeah,
be caving a bit.
It is. It seems to be playing a bit of catch up, which I did wonder yesterday, maybe after the end of month being value date yesterday, whether we'd see a bit of catch up, and we're seeing that. But still, it's not a lot, really, is it? I mean, it's grinding a bit. It's not collapsing. But this dollar move again, I can't help thinking that a lot of it is end of month because it's not uniform. Cable's gone, euro dollar hasn't. Aussie dollar's not really doing a lot. It's still finding support into 72.20.
Yeah, so that didn't take that out yesterday.
Yeah, dollar Swiss isn't doing anything.
Nothing.
Even dollar CAD's not really doing much. And so you think, you're seeing dollar strength.
Dollar CAD is really, it's the weakest US dollar pair, isn't it?
Yeah.
I mean, the Swiss is stronger. It's closer to the high.
Yeah.
And what was the other one we were talking about? Oh, the yen, the yen has been the leader,
Yeah.
followed by Swiss, followed by Canada being the weak sister.
Yeah, but even so, it's still, just the last couple of days, it's just ranging sort of 127s, 126s.
Yeah.
So, you look around these dollar pairs and, they're going in some, not going in the others. I mean, dollar yen, I started getting into shorts yesterday evening because we had that top right up against that old, is it July top that we had at 68 or something? And we tested that again and we didn't quite get as high. So I started layering in some shorts. To me, that's the area now, 1168, 70, 1120 is your support. And, doesn't matter what indicators you use, you've got two numbers there. It's either going to go above or it's going to go below. And then, I think we're going to follow it. But yields, giving up those highs, again, okay, it could just be a little blow off the top. A bit of easing, a bit of a pullback. But like you say, if it gets under 150, 148 in tens, you're going to start to think, here we go again. We've had a rally and now we're seeing it all reverse again.
Because if 148 is a breakout from 113, it's 35.
Yeah,
That puts you back near the old highs in the 170s.
Yeah, I mean, there's plenty of room to roam there. The big break point was down at 137, 138, as we've been talking about for a month or so. So there's a bit of room there. Maybe down towards 142, 140. We get another, maybe just stepping up the plane for another bit of ranging. But again, I want to get over this bloody end of the month stuff because I think it just throws a hell of a lot of confusion into the mix.
It's end of quarter as well.
End of quarter, end of Japanese.
Brian doesn't trust end of quarter
first
stuff.
Half.
End of days.
End of fishing.
That we're living. We're in them, buddy.
The pound, the cable you're talking about, friend John is actually right. It's been a pound move, not so much a dollar move on the cable, and the pound's been weak across the board, which is a little bit strange because remember yesterday, Bank of England Chief Bailey was on the hawkish side, but I guess it's a correction, and there's there's all these stories, and actually at the end of the day, people don't actually know yet what the real effects of Brexit are going to be. We're seeing things happening in the UK. I mean, you live there, Ryan, but obviously they're not all Brexit related. The gas problems and all that. That's
supply chain stuff.
Yeah, it's a different thing. But Brexit happened on the 1st of January of this year, and we still don't know what the real effects are going to be, or any long-term effects of that. So
it's
I guess
a breakdown, doesn't it? Still, doesn't it look kind of like a breakdown that this level right here was?
Yeah, the lows have been taken out. Yes.
Yeah.
And that 135 is a biggie. Is a real biggie.
Yes.
Yeah.
Yes. But
I heard. I'm sorry, I'm interrupting. I just heard something. My buddy told me that the UK used the military to drive the petrol trucks to resolve the problem.
They're teaching them to drive them now, right?
Are there still gas lines, Ryan?
Yeah, I spoke to my brother like 10 minutes ago, and he said that, he's trying to find petrol stations, and there's like literally 40, 50 cars wherever you go waiting. Yeah. So it's not the easiest thing.
Here's the thing. I mean, we spoke about it yesterday. It's twofold. Yeah, it's Brexit. But we know there's driver shortages in the rest of Europe and so on and so forth. But then also in the UK, I think there's 54,000 licenses queuing up at the DVLA, which is our driving authority, waiting to be renewed and stuff. So, the government there's got to pull their finger out and ease why is there so many people waiting for their licenses? They want to get into work, want to start driving, and they can't. It's a cluster pluck, if you like to put it politely.
I'll tell you what else has been if you've been having trouble trading the metals, if you just haven't been short. Yesterday, gold looked worse than silver interday because it made a new low, right? And silver held. And then today you come in with gold up 7 and silver down 17. That we're getting a lot of disjointed action between silver and gold. Normally gold's up 7, silver would at least be up a dime, right? not down 17
Yeah,
cents.
I think from one day to the next you can get these divergences, but they will go together, right? With
Yeah,
the exception of on a broad rally, silver outperforms, on a broad sell-off, silver underperforms. But yeah, you'll get the odd day of inexplicable behavior, but it happens. There's
yeah,
no
yeah. I kind of think it's I kind of use them for a tell. I don't know what silver is trying to tell. It's almost like at times when gold leads, it's more about kind of a chaos hedge or something, and silver needs risk on, I think, to really do well. It hasn't completely transformed into a precious metal. It's still more affected by downdrafts and
heavy industrial
economic
usage.
numbers.
That's for
Yeah,
sure. Yeah.
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 So is
Anyway,
Paulie
let's
with
see.
us?
Paulie should be here. Yeah.
Paulie, you here?
I'm here.
Hey, Paulie.
Hey, Paulie. I want
I'm
our
here as well, by the
audience-
way.
Oh wow,
Oh
it's a full
no.
house
What
now.
the hell?
Oh yeah.
All right. Well, I wanted to bring Paulie in so people know what they're missing if they're
You
not on
absolutely
the
should.
European crossover. Because Paulie, I bet before Face even came on, you had some nice entries or some trades before Face even starts during your session. Am I right?
Well, we were actually, I was speaking to some people on Twitter. We were looking for a potential rally from where we were at because I thought we were a little bit oversold, and I was just looking at some volume levels, and
In the S&Ps or
rally. We did
What
get that
market?
rally. We pulled back, and since then we're just kind of middle of the road, and it just kind of. But we have edged back from that area I was looking at. I was looking at potentially we'd get to 14,920. I think they made it to 14,926, and then we've pulled back a little bit from here.
What market are you talking about?
The NASDAQ.
Oh, okay. Okay. So you've been trading the NASDAQ 100s?
Yes.
Does it mean anything to you technically that NASDAQ took out last Monday's low and S&Ps haven't yet?
Well, what I focused in, and I've mentioned it several times in the chat room and also to a few people I talked to on Twitter, is that we've actually broken out, or at least for now, what we've done that is in the.
Why don't you
in
show
monthly-
the chart, Paulie?
I'm sorry, what?
Why don't you show us your chart? I'll stop sharing and show us what you're looking at.
Oh, okay, certainly. Let
Picture
me see.
speaks 1,000 words. So.
Trying to change it. Hang on. Okay, here we go.
Oh,
Let
what
me
a
see.
handsome guy. Look at that. Look at that guy. I wouldn't want to get into a
Never say
gunfight
that.
with that guy.
You never
Hey,
say
you
that
look
about
like
me.
you know who you look like, Paul? Billy the Kid.
I don't know about that.
Billy
But,
the Kid with Brad Pitt playing him.
Dude, do you see in my chart now?
Yeah, they're up
If
there.
Dale
Yeah.
says so, that's how it is, because Dale was actually friends in real life with Billy the Kid back in the 1800s.
Those were the good old days.
Yeah.
It was
That's
hard
when-
to find a market to short.
That's when gold meant something.
Indeed.
Yeah, that's when men were men. You could just grab a woman by her hair and drag her into your log cabin.
Oh my God. Okay. That's it. They're banning us off Zoom for
You
sure.
started it, man. All right, go ahead.
Next
Paulie.
thing you're going to tell us of how you were scalping Indians or whatever.
Dale Boone, man. Dale Crockett. All right, so yeah, so tell us what you were talking about, the breakout.
Yeah, and I'll show you here on the I'm actually looking at a monthly on the S&Ps right now, and if you can see
Wow.
here, we've been stair stepping. You can see this is on a monthly, so you can see each close is stair stepping,
Yeah.
stair stepping higher. We've actually broken lower right here out of balance here. You can see that. Well, what I was referring to, or what I referenced yesterday, was here on the NASDAQ. You can see here,
Yeah.
we've broken below this month, and actually going to be breaking out of balance. And was telling people, right now, as long as we've gone and broken out of balance, obviously there's another day left in the for the month, but
Yeah.
that's at 14,957. You can see here we're at 14,853. During this time,
That's
I
an
was,
outside candle, isn't it? We took out the previous month's high.
well, yeah,
candle.
at least for now, we haven't closed
Yeah.
yet, but I mean, it's showing here that
It's one
we're-
day.
that we're
It's one day.
breaking that we're breaking this upside move that we've had, this stair step. You can see consistently just one after another after another. As long as you do that, the bulls, although primarily I scalp, but you can see here that the bulls remain in full control. So the people with the longer term outlook, hey, they're going to go on and stay bullish, and we've seen that run continue on up. Obviously, not as pronounced as we've seen in the S&Ps, but certainly you can see this move here. Well, now the bears are the ones who've taken control, and we saw that yesterday as everything just kind of rolled downhill and broke lower. And I was referencing or knowing to people is, hey, look, as long as we're below that, and it looks like we're going to close this way, then we can really open lower now for an extended move lower or more of a correction. Not one of those people that are calling gloom or doom, but once you've done that, then it's really going to open the door for us to continue to go on and correct lower, unless
That is a
something
great telescopic view, bro.
unless something dramatically changes. Actually, if you look at it here on the 2-hour chart, you can see that 14,950 area here. So one of the things I was looking at yesterday, and what I generally look at is I'll, trade basically the levels. I always say, everything counts as the levels. And sometimes when people look at my charts, they'll think, oh, well, you don't have your resistance or your support. It seems like it's in the middle of nowhere. You don't have it at the high, or you don't have it at the low. And what I always tell people is, and I found that it actually works pretty well, regardless of what market is that I put my levels through. You can see here through the bodies where there's going to be the close, primarily the close or the open. And the reason is I tell people the close is what I call put up or shut up time. It's basically whether it's the close of the hour or 2 hour or the close of the daily or the weekly. It's like when the guy comes tapping you on the shoulder and says, look, you're going to have to be out. You're going to have to be out by the close. You're going to have to be out by the close of the week. So at this point, that's where I'll go in and put my resistance. And you can see how often when you put these, to these bodies, how often the market will come back, and you'll see bounces from that, because to me, as I told you, Sherry, you can see this one close here, and you can see as the market tries to get above it. Can we get above it? Yeah, but can we close above it? No. And then we keep kind of pushing up. But once we get above it, we start getting going. Then that's where the momentum comes back. And where does the support come back? They come back to retest that line. So my levels are always going to be going through the bodies. It's rare that I do something. You can see the same thing here. Look at the body here. Okay, just to give people like give an idea of the way I look at things. As Blake likes to say, there's many ways to skin a cat. Not saying my way is better than another person's way, but when it comes to levels, I will say that this works very, very well. You can see here, right across here, we close there, there's the body. And where does the market come up to? Right here, practically ticks it there, comes up just a hair bit short. And then obviously we turn down, you see the same thing here. The other thing I'll look at, I do look at market profile. I'm not an aficionado. What I do with market profile is what I'll do is I look at confluences of areas, whether it's going to be the opening, not the opening, but the value area low, the value area high, or where it confluences with other ones. That's all I'm doing is I'm looking for confluences to get an idea of where you may start to see selling or buying develop. And then of course I'll look at the volume. One of the things I do look at, and I'll jump to that area.
Only because volume also shows commitment, right?
That's true. And one of the things that I was looking at and why I thought that we were going to move higher, and right now, usually a 30-minute, sometimes I move it even closer so you can see it's all mashed in here right now. But yesterday, what I was looking at yesterday was a move in here, and I can't see it because right now we have the where we control the screens up in here for the webinar. So I can't change it right now. But yesterday I thought we would make it, and I think I may have updated this to an hour. I'm not sure because I can't change it. You can change it how you want. I generally will use a half hour, but sometimes if I'm trying to look further back, I'll move it to a 2 hour. But potentially I thought we might make it up to 14,886. We came up just a little bit short. I think we came up 14,873, and we paired back. So I thought we were really oversold. And I thought because we had broken, that monthly, at least for now, had broken that out of balance of the monthly. I thought we saw continuous pressure come into this market. And so I thought, okay, we're probably going to rebound. And if you see here, this was my area right there. I thought, okay, I think we might make it all the way up to 14,920. And I was talking to some guys on Twitter last evening. I was saying, hey, look, we're pretty oversold. I'll show you what I was going to. One other thing I referenced that looking at volume, but I thought, you know what? I think this is where this market may get to, but this is going to be key right in here. And you can see here, if you look here, this is that 14,950 area that I told you about. 14,957 is when we break down. And what it is you can see here, we've got these profiles. I've got them on a half hour, but you can see the more the key volume in that area you can see is going to be marked with a yellow. So you can see a whole confluence of happening right in here. We're all happening here, basically 14,959, 960. So I've got this cluster. So to me, what that tells me is that, hey, look, I'll step in, I'll try and sell, take a short against this area. Maybe if the market pushes up, you get a little bit of heat. Maybe they get the vote for the budget, so you get a wild jump. But I know that right here, there's a ton of volume, so that might be tough for the market to at that time to go in and be able to fight that. So one of the reasons that I looked at that, and I'll jump into another area, show you kind of like how I try and put things together. And once again, primarily I scalp, day trade, but primarily scalp. So let me go on and move into here. So if you look here, here's the profile or the volume for the entire week. And one of the things I was sharing when I was speaking to some people yesterday was, we had fallen so far. And I said, wow, if you look at this for the week, the key volume is still right here at 15,193. And I'm thinking, okay, so we broke below that monthly here. We're, at least it appears, we're breaking out of that monthly to the downside. So a lot of technical players are just going to, from a medium to longer term perspective, say, hey, we're breaking out. Got to go and get it. If they're not getting short, at the very least, they're saying, I'm getting out of my longs. And we saw that yesterday as we could not hold any bids. I got long a couple of times, got lucky. I think one of my ended up just jumping out for a couple of handle loss or something like that. And then I was glad I did. We just kept rolling lower. And I said, you know what, this thing is just not, we can't find any bids. And so we kept pushing lower. And that's why I started telling people, hey, look, we're breaking below the monthly. You can't step in and try and fight this. But I thought yesterday after the US session, and we do it early in the Asian session, I thought, you know what, I think we're really overdone here at this point. And I mentioned, hey, I think we might get a pop-up, because if you look at the key volume right there, you probably can't see it very well, but there's this orange line there. That's where the key volume for the week was at 15,190. I think it's 492. So I thought, you know what, we're open to going and moving higher. So as I told you, I thought if you looked at that volume, I thought 14,920 is probably right where they're going to run out of gas. I was thinking where they could eventually go to. And if you look in here, we actually, and it's going to mark the green bar, is going to mark the high. The high for the move was 14,926. Now, one of the things I was mentioning to people last night in Asia, I said, hey, look, the way I look at it is and I'll jump back and forth here to kind of tie it all together. Let me jump back in here to the main screen. So once again, here's the NASDAQ, and let me show you the S&Ps. You can see the S&Ps have been stair-stepping, and they've broken out of the monthly also. They're broken out of balance. And one of the guys was laughing yesterday. I said, hey, look, you look in these indices, they've been stair-stepping higher since Moses crossed the desert. And you can see that it's just been up, up, up. So you can, I know for some people it's probably been frustrating thinking, oh, we've reached a high here, we've reached a high there. And I've been there. I used to be the one to be trying to fade this and fade that. But as long as you're stair-stepping, you just can't fight that. You might get a few pullbacks, but the bulls will remain in control. Well, as of now, as we're into the end of the month and into the quarter, we're breaking out of balance. So that's what I'm saying is at this point, doesn't mean the wheels are going to fall off the caboose, where everything's going to be horrible, but we're probably going to end up correcting, lower here. Now we'll have to go in and find what they last time referred to as find value, because once again, you break this, you're going to be moving lower. Well, getting back to the NASDAQ, we pull that up here. So when you look at here, we'll pull this up closer. You can see here, okay, well, this is a monthly. We're stair stepping. We're just moving higher and higher and higher. You can't fight it. You just keep on going. But now we're breaking out. So when I pull this up and bring it in here so we can see a little bit more clearly, that comes in at 14,957. Okay. So my take was, and I was mentioning yesterday, I go, hey, look, we broke that. And I mentioned that midday or earlier than midday yesterday. I go, here's the deal. They break this. I go, you can have people shorting on rallies, selling with impunity. And so now we talked about that 14,957. I thought, okay, they might make it up to 14,920. We'll see what happens. So now when we come over here, and I had looked at some volume in the profile, but when we go back to this screen here, and this is what I was talking about. So here we are. We came and I was looking for potentially 14,920. You can see here, it's marked off in a green bar. The high for the move right now, the session right now is 14,926. So when you scroll up in here, come up here to remember 14,957. Look at that at 14 right now. They've got 81 sitting on here, and it's pretty quiet because we're down here, sub 14,900 right now. But right now they've got 81 sitting on here, just waiting to short that. And that's what I'm saying. That's where that monthly break is at. So that's what I'm saying is if we do get a rally because of, let's say they're going to get the vote and whatever's going to happen, we're probably going to jump up. But I was telling people, you just need to go on and be ready. And now if I pull up here and here's my profiles here, you can see here, one of the things I told you, I said, again, I like to look at confluences. So what I look at, you can see here, the low for the day here, and that was on the 21st, 14,963. Look at all the volume that comes in right here. And that actually came in, that volume came in right there at 14,936. Okay. And then the same thing with the close here, 4,991. But you can see a lot of volume coming in here. So I think if on runs back to this 14,950, it would be tough for the market to try and get past that. And once again, you can see here.
What time's the European crossover start, Paulie?
It starts at 3 a.m. Central Standard Time, which would be 4 a.m. Eastern.
Okay. And do you have time to, you're interacting with the people that are there. Would you say that some people over the last few years have come in and have taken up some of the things that you teach and integrated them into their own trading now?
Well, from the levels, I mean, when we come into the show you here,
or they rely on
yeah.
your
So
levels?
we have what we call the bias chart, and I go
Okay.
on and these are the markets that I go and look at, and although we've got them pretty much, FX now starting to break out a little bit, but it's been relatively quiet. So we go on and lay out, we come into there, we look at what the news is as far as economic data that's being released during the European session. And then sometimes we'll take a quick overview of where the markets are, whether it's indices, euro, gold, etc. And then what we do is we just start out fresh, and then we lay out the bias chart resistance and support here. Let's go and move this here. We set that up for the day. So you can see here now, the low for the move. Let's see here, in the euro, the low for the move, look at that, is 1639. Look where my bias chart support today was, 1641. And we were not at that area when we were moving lower. Actually, I think we were in the upper 50s or something like that. But this was my bias chart support. Now, my bias chart.
Jane just said Paulie's analysis is fundamental for the day's trades. So,
and on my bias
she's a
chart,
pro. Go ahead.
What I do is I tell people the bias chart is for the next 24 to 30 hours. So it's based on very, very short-term trading. It's not looking like, okay, well, if the euro, we got support at 116 and resistance at 118, that doesn't do anybody any good. Look, no offense to anybody, but I tell it like it is. It doesn't help anybody in the trading. What I do tell people is incorporate these levels, which are very, very short-term levels. Like I said, you can see here, I just missed the low by what, a pip and a half here in the
Clean
euro.
it up, man.
But is it incorporated into your own trading? Because this is going to be very short-term stuff, very short-term. I mean, obviously with the crude oil, we're actually looking at the monthly chart on Monday to start out the week. And I think we had 76.95, which was absolutely huge. The market ran out of gas at 76.67, but it's very short-term oriented. So once we, on the Monday, we'll spend a lot more time kind of giving an overview of the week. The ranges might be a little bit wider, and then we narrow things in. We come in, we look at the economic data for the Europe, look up for anything that's coming out in the US, and then we just hit the ground running. We just start going through the levels. If anybody has any questions, then we'll go on and we'll answer that. If not, today I think I spent a little bit on the volume area in the NASDAQ, and of course we do cover the S&Ps, but once again, that's what I'll go on and put my focus in. And the only other thing I will say is I don't use, and I've used every tool in the toolbox. And once again, Blake always says, hey, you got, no more ways to skin a cat. But one of the things I don't do is I don't use oscillators. I think they're just, they're nothing more than a derivative price. I'm probably going to step on some toes, but so be it. That's just the way I am, is that, I don't see the the use of oscillators unless you're trading from a very, very longer term perspective. Because look, the market is oversold. Our RSI is oversold. Okay, well, now I got to buy it because RSI is very, very oversold. Oh my God, it's extremely oversold. Mortgage a house. You know what? Now it's really oversold. Mortgage a neighbor's house. And look, you're just going lower and lower and lower. And the same thing with stochastics. So I don't.
Well, you were
using
it wrong.
Oscillators.
You're using it wrong. And anyone who does that is using it wrong. It's not the indicator. That's the psychology.
Right here, all I'm using is the VWAP, and this is VWAP off of the most recent highs. But I don't use any oscillators. The only thing I'll do only from a very longer term perspective, look on the daily. I will use a moving average. So here's the 50 when we broke that, and we've got this 100 because I'm thinking, okay, where can they move to? Where will they push to potentially here? So on the NASDAQ daily, you can see the 100-day moving average comes at 14,639. Once again, I'll look for some confluences here, look at where some touches are and say, okay, across these key areas, where can this market get to if we're going to break lower, and where we may the market make a stand. But right now, as I mentioned before, is bears are solidly in control at this point. And when I told people, look, you just can't fight them. You have to be careful trying to pick something up. If you do pick it up, like yesterday, we were talking about, it's late in the session. It was actually, the US was already closed. I said, you know what? I think there's a possibility. Well, we can now rebound higher. We did, but you can see here now we're pushing lower. We're almost 100 lower from where it rallied to
from when you started talking.
So once again, like I said, that's just a way that I go in and look at it. Like I said, there's people have their own ways. I just try and go by the levels, and then I try and use volume along with the profile. And that's the way, like I said, that's the way that I'll switch. That's a full session profile, but then I'll roll into the day and simply I just look for confluences here when I'm using the profile. If we're making a new high, we're pushing out. Where's the initial balance from the previous days? Where is it where the market may, once again, find some selling. So basically, that's the way that I use it. But I found, at least for me, as a day trader, scalper in the indices, that's what works best for me. Other people might find other things that work better for them.
Yeah. You know what Schwager said? Find a trading style that suits your personality. Looks like you've done it.
Yeah, it does fit my personality. Yeah. I mean, I know I always tell people I'm never going to be that guy that, if you were talking currencies, close out a position for 200 pips or close out an indice position for 85 handles. That's just not my temperament or personality. So I'm feel more comfortable moving in and out of a market. But yesterday I was doing that, came out with a couple of longs. Okay. But then it's like, man, this thing just can't hold bids. So, you got to face facts that this thing is being overrun for now and just lay off of it. If you're not selling it, and it was too late to short it at that point. So the latter part of the afternoon, I tried to short it against that on that move higher, it just came up about frustratingly about 15 handles short, and then all of a sudden just started taking, started moving lower, and I didn't mess with it. So sometimes I was telling people in the chat, sometimes you miss a train and or the bus, and you just got to just let it go, because I've been there. Don't chase, because quite often, more often than not, when you chase, you end up selling into the hole.
Okay, is
Wicked stuff.
Steve Volge still here?
Absolutely.
All right, Paulie, thanks so much. So there you go. What a great display. And you know what Paulie's showing on the monthly candle is pretty important. I think this market's in serious trouble anyway. So, Paulie, I know that if I was in there with you every day, I'd learn from you. I'd learn from you today. So, if some of you guys out there are looking for, this is your style, you want to become a scalper, a day trader, what a great guy to learn from. Okay, so, and we have the deals happening right now
Yep.
on the promo, right? So,
Indeed, we have our new season offer as every year, roughly these days.
right, and they're good offers. So take advantage of them, because then things won't happen till next year on as far as discounts. In fact, I think I heard that after this promo is over, Steve, that we're having a supply chain issue, and that new subscriptions are going to double because we're having trouble
finding truck
upping.
drivers.
Finding truck drivers and coders, and everything's gone up, and to broadcast this every day went up 50%. So we just a supply chain, a transitory a transitory supply chain issue with
Everything is transitory,
price increase.
As they say, if the time frame is long enough, right, everything is transitory, right?
Yeah, like us.
Exactly. As Paulie was speaking, we got some Canadian data, producer prices, 14.3% up year on year.
Oh my goodness.
Yeah.
That's
transitory.
a hell of a number.
Yeah. I mean, why not, right?
Yeah. I hear all these rich guys are leaving America and they're all buying islands, So someone said that Trump just bought an island, and Zuckerberg bought an island, and Gates is looking at an island.
We're an island. They can come by us.
You ought to put an ad out there.
And since you are at it, bring some oil, right, Ryan?
Yeah, exactly.
But Steve, this guy showed, he's talking about another crisis happening, and he talked about the Greeks and showed the last crisis in Greece, and that it's starting there again, that it's showing people in the streets in Greece burning wood to stay warm. Is that really happening there?
It would be quite impossible, since with 30 degrees Celsius, you really have to be a retard to want to warm yourself.
Well, what if you're homeless and you want to make s'mores?
Yeah. So whoever said that, I can tell you in advance that it's a theory that's
okay. All right.
Dead. Dead by default.
Doug Casey, you've heard of Doug Casey.
Because the coldest day we've had so far this year is like 22 degrees Celsius.
So you've seen you haven't been singing by any campfires or anything?
No.
Okay.
Sorry to disappoint.
All right.
Weather here is still lovely. I mean,
Raksha
we are out with t-shirts.
Raksha's in the UK, and she said she's caught in some cyclone or something. She's trying to make it to the office, and the weather's bad, so she couldn't make it for another 20 minutes or so. So I'll just reschedule her. So, if there's anything else you guys want to cover,
I assume because there's not going to be enough time for her
I told her
to have a proper interview. Yeah.
Right.
Aussie's having a little break. It's broken at 20 level, Aussie dollar.
Okay.
Indeed. Let me grab the screen.
Strengthening. Yeah. maybe we're gonna get that moved to 96, guys, in the Dixie. I guess, well, we can't trust it. We have to see what happens at the beginning of October, which according to my trading warrior brother, Steve Volge, is the best time to look for reversals of a trend at the beginning of a new month.
Listen, what is happening as we speak daily is that at the same time we have the DXY breaking out from
Yeah.
this triangle,
Yeah,
which opens the door for the next upside objective, which is 94.50 to 95.
yeah,
As at the same time, unsurprisingly, of course, because this is mostly what drives some flows to the dollar. We were talking on the morning edge about it the day before yesterday when we started the week. I said how important it is for indices to make a decision, and the decision time was on Monday. And why is that? Because we had broken down from this ascending wedge in the S&P. We had done
Yeah.
the exact same thing in the Nasdaq
yeah,
from an equivalent shorter term, but still an ascending wedge. And when we were having the webinar, the Morning Edge webinar on Monday, we had approached in both cases the ascending wedges trend line support. And I said that, this is decision time. We get rejected from here, we're going to see more downside. Now, alternatively, we break back within the wedge. It means that we've seen the end of the corrective move, and then we're back in the status quo, which is the slow grind higher, which should not help the dollar, and it should actually drive flows out of the dollar and help commodity currencies perform really well. So we got a nice rejection on Monday and a very, very nice follow through, especially in the case of the Nasdaq yesterday. So until proven otherwise, short term, we remain in sell, sell
Everything.
sell the rip type of environment. I repeat, in the
Yeah.
short term, because longer term, we don't have an invalidation of the uptrend, but we've definitely got finally, some dent in the armor of the bulls, and who knows? I mean, we might see this move unfold much further than people believe. My next downside objective, as you see, having to do with the S&P, is here, roughly at 42.50. And as long as the indices remain under pressure, the dollar should continue to do, okay, at least okay. And in my opinion, that's the main theme currently. And obviously, as long as the dollar
First nice failing rally in the index is 61.8.
Yes.
S&Ps did a little better than that.
Yes, in
So,
quite some
yeah.
time, actually,
Yeah.
quite some time, because
Yeah.
if you notice, for example, the S&P, every single sell-off that we've had in a long, long time was a
Right.
one-off thing. 3, 4, 2, 5 maximum days
Yeah.
of moving lower, and then just directly
No failing
reclaiming
rallies, new
yes,
highs.
reclaiming the new highs directly. So yes, this is a change of behavior,
It is.
as I said before, and it is one to note. Now,
It is.
should people turn overly bearish
Yes.
just because of that? No, they shouldn't be overly bearish, but they should definitely be aware that
they should have their claws out
they should definitely be aware that
and drinking
there
honey.
there are dangers to the downside. And of course, we know that in the current environment, the vast majority of the markets moves around the risk appetite, right? So indices and the behavior of risk assets is extremely important to determine what's going to happen next in FX. Even cryptocurrencies, which we know are extremely, extremely risk sensitive. I hate to break it again to people that believe that owning Bitcoin or any other cryptocurrencies like having your money in a safe haven, it has nothing to do with that. Cryptocurrencies are extremely sensitive to sell-off conditions, and the more broad adoption of them makes it even more so, and not even less so. Because, for example, accepting that now there are funds out there, etc., that own cryptocurrencies, you know very well how these funds have no problem in rotating whenever is needed. And guess what's the first asset they're going to be rotating out of? in case things start really going bad. And yes, it's obviously the most speculative one, right? So people should be aware that the fate of cryptocurrencies at the moment is also very closely tied to what is happening with risk appetite. For the time being, the move down.
Everything.
Yes.
Everything is.
For the
Even
time
crude
being,
was down for a little while yesterday.
correct. Having said that, crude remains, extremely well bid, and despite yesterday's rather bad candlestick, after more or less retesting the high, I strongly believe that as long as we trade above $70, the path of least resistance remains higher, and it's extremely likely that we're going to see sooner rather than later levels above 80. We've said that some time ago, and I believe it more than ever. So yes, clearly, if we get a risk off, as you mentioned, Dale, that is going to affect crude oil as well. So it's going to, in essence, prevent it from pushing higher. It's going to be a headwind temporarily. But as I said before, I don't really think that even if we see this risk of move unfolding, for a few days, I don't think it's going to lead to some kind of a massive sell-off. Not because valuations don't render one needed, but simply because the situation is still under control by central planning, fiscal policy, and mostly monetary policy, which even makes possible for fiscal policy to be that loose. Because if monetary policy, if central banks were not monetizing with unprecedented rate the sovereign debt, fiscal policy, expansionary fiscal policy would be, something that would be totally
Elizabeth
unable to happen.
Warren called Jay Powell in the Senate, said, "You're a very dangerous man."
Yeah, you have to give me credit for that, because if you remember, we had a conversation about Powell a few days ago, and I said that I don't believe they're going to keep him.
Yeah.
Because he's, in my opinion, he's tainted, politically tainted. You know what I mean? Now, do I believe? Yes.
Okay. Yeah.
Now, do I believe that his replacement is going to do anything different? I absolutely don't. I think that central banks, Fed is, probably the best example, have been a long time ago, but with the excuse of COVID, even further, become 100% political instruments. And I believe that whoever is the placeholder of the chairman of the Fed plays very little role, because they've boxed themselves in any case. I mean, they have to keep monetizing debt until the sun goes dark.
So really, this is the first time we've had Secretary of the Treasury also be the head of the Fed at the same time.
To be honest, I really approve of that.
It is that way.
I really approve of that, because at least it's not hypocritical. You know what I mean?
Yeah.
It shows very clearly what is the relationship between government and the central bank. That is the relationship of the government and the central bank. It's one and the same.
Yeah. All right. Well, it's great to hear your voice and your analysis, and I see some of the similar things. That was a real interesting monthly candle that Paulie showed.
Yes,
I think it's important. And
yes, let's see.
And Ryan,
let's
what
see
a
how
great team. Natural gas.
Natural
you were
gas
on that at the bottom. You were on that at the bottom, Steve.
Natural gas is just a beast. We've talked about it a long time ago. I've told people multiple times not to try to fade strength here. I think now we've seen another extreme with some nice RSI divergence. I think we might see another pullback, but it remains a buy on dips in any single occasion. It's a very strong market. And I think even with yesterday's extreme candle, we haven't topped yet. We might have.
You know what I'm hoping for, Steve, and I do. I know you're going to say I'm crazy, but a nice 20-30% sell-off in the market. would make all these assets that have gotten away, like nat gas, just suffer
Mhm.
under the pressure of liquidity,
Mhm.
set up some great buying levels for things that have gotten expensive again.
I really wish it happens as well. I'm very, very skeptical because especially post-COVID, the fate of the perception of economic recovery is almost solely dependent on asset prices. So I think they're going to do whatever is needed for this only leftover pillar to not crack. Now,
All right, well,
that
I'll
does
leave you
that
with
make it?
one word:
Does
China.
that
They're bigger than the Fed.
they're
What
bigger
happens
than
over there?
they're bigger than the Fed, but
They are.
I've said it before in the morning edge as well. I think that what is happening in China is more of a controlled demolition type of event and not
Yeah.
a chain um, not a nuclear chain reaction that's gone out of control. Not at the moment.
Right.
And if that remains to be the case, I don't
It's
think
not.
there's going to be any big spillover. I think it's going to be a soft landing. I think the Chinese are actually generating this to be exactly that. They wanted in advance to deflate some of the bubbles in a controlled manner before they become too big to fail, before deflating them would be impossible to do without imploding the system.
Okay. We'll see what the controlled demolition looks like in a few months. So
Indeed.
anyway, that's something to keep an eye on. I think there's some geostrategy with their economic policies too. They're
Always.
not just doing
The
it because of the
Chinese,
economy.
the Chinese have a long-term
They'd
plan.
like to inflict some damage on some of their adversaries economically first, weaken them even more. That's my opinion, and
If
I'm
you're
sticking
talking,
to it.
if you're referring to the US as an adversary, as an outsider, I would tell you that you have no reason to try to do anything to prevent your enemy from self-destruction. And as an outsider, I don't see the US needing much help to inflict
No, they
wounds
don't.
on
No,
its
they're
own.
self-inflicted wounds too.
Yes,
So yeah,
yes.
so
The
the
biggest ones, in
combination.
my opinion, are self-inflicted. Yes.
Oh, okay. All right. Well, to all the masochists out there living in America, from my Greek brother, have a great trading day. We'll be back here tomorrow, and you could catch the team.
In 17 minutes.
Yeah, and join so you could hang out with Paulie in the morning, and you'll be way ahead of me when Face starts. Paulie's up before the roosters crow, because I am.
Very true.
So he's like an owl. So anyway, everyone, have a great day.
You too, Dale.
Adios.
Bye bye,
Thank you,
everybody.
Steve. Don't just count.
Bye bye, Ryan.
Ryan, great to have you here, Stell. So don't just count all the people you talk to in the morning. Count your blessings, because they are your blessing. Adios, everyone.